Hello everybody and welcome to this week's trading tips from Smack the Markets for week commencing the 15th of November. So this week we're going to look at how we identify trading windows. We'll discuss what they are, how we identify them and how we use them within our overall trading decisions. Now last week we discussed trading with relative strength and relative weakness and how we used that to incorporate that within our trading strategies, particularly when trading forex markets. With trading, traders will use multiple different layers of technical analysis, multiple different methodologies to interpret the markets. The techniques that we've discussed so far are not really sort of trading strategy techniques. These are more methodologies to understand price action, to understand what's going on in the markets. We'll need a trading strategy to be able to enter the market, but that's quite a long way down the line. First of all, what we've got to do as a trader is to identify what market to trade, whether to trade today for a start, I suppose. First of all, what market to trade, where's the safe zones to be able to trade, and have we got the overall general strengths and weaknesses in alignment for that market right here and right now. So in essence, we're going to be building upon the techniques that we discussed last week. So first of all, if we look at today's markets, today's actions, the strengths and weaknesses today, we've certainly got strength this morning at least in the Aussie and the Kiwi. That's off the back of the China industrial production numbers, which came out and were very strong. That has given the Aussie and the Kiwi a lot of strength this morning. On the weak side of things, we've got the yen, the Great British Pound and the dollar. Now the yen has been quite a weak market it's probably been the weakest market I think over the past quarter at least, and the Aussie again this morning quite a strong market, so we'd be looking for strong Aussie, the Aussie advancing against the Japanese yen. Now, there's a number of other markets that have got strengths and weaknesses supporting them at the moment. We could look at the Aussie, the Kiwi rather against the yen. We could look at the Great British Pound against the Aussie. We could look at the Aussie dollar, for example, but in this example we're just going to take a look at Aussie yen to get a concept of how we can identify and how we can use trading windows. So we've already got one thing in alignment for this market and a direction, and that's the strengths and weaknesses. If we start to look at market structures and trading windows, what we're really looking for is an area within the market, a window within price action where the market has really failed to find any historical support and resistance through. So we want a window, an area of the market, like an air pocket if you like, so that when price breaks into that level, into that pocket, it quickly moves on to close the pocket at the other side. Identifying those areas helps us to be able to get positioned and trade within those free-flowing pockets within the market, and that obviously helps to improve our trading probabilities of the markets and the opportunities that we take. So when we're looking at identifying these pockets or these trading windows, we can look at multiple time frames. We don't want to identify a pocket in or a window in one time frame only for there to be serious resistance or serious issues with that going up to another time frame. So we can look at every time frame, and sometimes I look at the monthly chart. Sometimes the monthly doesn't really give us an awful lot of information. What the monthly can tell us today though is that, well, since the coronavirus crash in 2020, Aussie yen has been broadly in an uptrend. We've had higher highs and higher lows, and the market's recently made a new high, and now we've had a pullback. So the question is, I suppose, for us as a trader is this a pullback? Is this an area where the market actually may well find support, and is it going to continue, or are we going to pull back even further? Well, we can't see anything more there on the monthly chart, so we need to come down to the weekly chart. And again, on the weekly chart we can see the broad uptrend that we've had here on Aussie yen since the coronavirus crash. We can see the recent pullback that we've had here, and the market's bounced off the 78.40 level. It's recently made a new high, and now we've had the pullback here on the weekly chart. Now this pullback probably doesn't give us an awful lot of help. Well, there is a little bit of resistance that we can start to establish here on this time frame, taking in these lows and this low here. Now we'll probably see a lot more detail of that on the lower time frames. So there's started to see a little bit of evidence here that yes, last week's candle was quite a shallow candle. It was a bearish doji, but we started to get a bit of buying action in the early start of this week. So again, let's start to come down to the lower time frames, and the lower that we go, the more detail we're going to see. So you can see here on the daily, our 83 level where the market turned has actually got some previous support and resistance around there. So there is evidence here of previous structure. The market's bounced off there. We've got strengths and weaknesses supporting this higher as it is. Am I suggesting that this could keep going and make a new daily high or a new weekly high or even a new monthly high? I'm probably not suggesting that at all at this stage. What I'm looking at actually is that the market's bounced off support. There is a window here on the daily time frame up to around 84,495. So there's still more distance that this could retrace before it goes into a brick wall. That's on the daily time frame. If we go down to lower time frames, we may well start to see some more detail in here. So let's go down to the 4-hour time frame, and a 4-hour time frame is a time frame that I like to use. It's one that I start to look at mid-time frame detail on. You can see our 83 level here. In fact, we can start to get a little bit tighter on that 83 level. We can see that the market tested that multiple times, in fact, and since it was testing that level, we started to get some strength coming into the market, some strength in momentum that actually started to push this market higher. Now we can also see our 85 level up here that we saw on the higher time frames. We can see 84.50, so 84.495. That was the level that we've seen on the weekly and the daily time frame. There's probably another level on this time frame, I think, as well, around 84.185, and that's all these highs up here too. So, and it also coincides with this low here too. So we'd certainly be wanting to know about that level there where the market's found resistance multiple times. There's still distance to get up to that level, and in fact the trend here on these mid-time frames is now looking more bullish than bearish. So again, let's go down to the lower time frames again and start to see what sort of detail, what further detail we've got in here. So if we come down to the 60-minute chart here now, you'll see the little dotted lines that we've got in here. These are Smack the Market's pivots. Pivot points are another technical factor that many traders use, many technical traders use within their trading decisions. If we just move this level down that I've got here, you'll see that there is a pivot point right underneath where my level is today, and I've just marked another level in today, which is this level here, which is just around where the market is at the moment. So that's around 83,822. It takes in all of these lows where the market's tested good 3 or 4 times as support, it's retested it as resistance. There's a pivot point there today. For me, that's an area where the market may find resistance. I wouldn't want to trade into that at risk. So if I was positioned in this market and I was risk free, then I might be prepared to run a market through it, run a trade through it, but I certainly wouldn't be wanting to be at risk going into that. We can see our levels in here. We've got a couple of other levels in here, in fact, that we couldn't see on the 4-hour time frame. We've got our lower level around 130 in this case. Actually, the level coincided with a pivot point where the market's actually tested multiple times. So there was more technical analysis at that bounce that we saw there on the weekly, the daily time frame. Now we've got the level that we just marked in. We've got our levels that we identified on the higher time frames, and you can see that we've got these sort of trading windows, these distance here, where the markets have got these pockets where price action has slipped through before. Now, it doesn't happen every single time, and of course every trading strategy, there isn't a 100% dead cert trading strategy or holy grail, but we know as traders what we're aiming to do is to be right, 75-85% of the time. So we can see that the levels here have been, or when the market sort of tested one of these levels, this lower level, it's bounced up to the previous, the higher level multiple times in the past. It didn't do it on this occasion, and there could be reasons behind it. It looks like this was some kind of high volatility move that the market had, possibly a news related move, and it ran out of momentum when it hit that pivot point, and it sort of fell back into the congestion. Where we are at the moment, the way that we would utilize this for our trading strategies and our trading ideas is that we've identified these pockets, these windows now within price action. We'd be prepared to look at trading setups within these windows, but now that the market's breaking through, we'd look for some kind of pullback where we'd look at maybe positioning above this level. So we certainly wouldn't want to be positioned in front of it. If this level could incorporate a setup where this was acting as protection for us, that would be even better. And that's how we can start to identify areas within the chart, areas within the trend, and areas within price action where we'll start to look for trading setups and utilizing further techniques to execute trading strategies. So we've used strengths and weaknesses. We can see that the strengths and weaknesses are supporting this market higher at the moment, and now we've started to layer in trading windows to identify where the safe market price action is for us, or where the chart action is, where we're going to start to be interested in looking at trading opportunities. So again, there's another technique of how we're starting to incorporate further analysis to help us to understand price action and to help us to identify where and when we might start to look for high probability outcomes. I certainly hope it helps, and again, if you like this sort of information, if you like these sort of trading tips from the techniques we use at Smack the Markets, again, if I ask you to subscribe to our YouTube channel, hit the notifications tab, and also remember to give us a like on the video, and then we'll know to produce more of them. Hope it helps, and I'll speak to you next time. Bye for now.